Hi, this is the USDCAD pair, and today it's 14th of May 2013, and the time is 8:34 GMT. We are looking at the M15 chart of the pair, 15 minutes chart, and we are using Ichimoku Kinko Hio system to set up our trade. On the M15 chart, which is a small, the most reliable among the small time frames, and one which we use as a filter before we make some decisions or before we start watching for all our criteria to be met for our new entry. And we see on this chart that the pair has been in a consolidation phase for a while. Let me insert the trend lines to make it to help you see the triangle here. And that means that we should expect a breakout at any moment, and it may be a very strong one. Since we had already 1, 2, 3, 4 times the upper trend line touched, actually it was touched 3 times from the price. The fourth time usually is the one which leads to a breakout. So potentially there will be a very big move for the pair now. So the leading Kumo is horizontal, but although bearish, it has flat top and curved bottom, a curved lower border, which is a belly down leading Kumo, and it's indicative of bullish reversal. Once we see the reversal going on here and everything going bullish, clearly bullish on M15 chart, which means that price will go up. And so I was telling you that we are going to see a bullish reversal. Once we see the bullish reversal clearly evident here, with the Chiku span, the green line going above past price action but above the Kumo, now it's below Kumo yet, with the Tenkan Sen going below the price and above the Kumo, and Kijun Sen below Tenkan Sen and above the Kumo. This is about to happen in the next couple of candlesticks. Then we go and see if we have 100% bullish picture on M30 chart, and that means that we'll have to wait for a Kumo breakout, a bullish Kumo breakout to happen here, a new leading Kumo to be born here on the edge of this leading Kumo, which gives us a bullish reversal image. If a new bullish Kumo with a sharp edge is born here, and once Chinkun span, the green line, goes above past price action, straight up, turned straight up, and not moving sideways like here, and not touching the price but being clearly above the price, and once we see the price gone above the Kumo and we have a clearly bullish breakout, and Tenkan Sen, the red line, and Kijun Sen below price sloping upwards, then we will go to the daily, to the H1 chart, the 1 hour chart, and see if also the leading Kumo will be bullish, if we will have a 100% bullish picture here, which is not the case right now because Chiku span is below past price action, not above it. And if we also see on the H4 chart 100% bullish image, we now see that the price moves inside the Kumo. So logically, we may have a very strong Kumo breakout, a bullish Kumo breakout on this chart, the H4 chart. The leading Kumo here is bullish, but with flat bottom and almost flat top. So we have to see a sharp edge pointing upwards at the leading edge of this Kumo to be sure that things are pretty bullish. The Chiku span needs to go a long way to jump above the Kumo, but we will be happy if it just turns upwards instead of going in a zigzag mode horizontally like here. We want it to turn upwards. So if the Chiku span on the H4 chart looks upwards, the price has gone out of the Kumo to a bullish direction, and the leading bullish Kumo has a sharp edge pointing up. If on the H1 chart we see a leading Kumo clearly bullish with a sharp edge pointing up, and the price had gone out of the Kumo in a bullish Kumo breakout with Chiku span pointing upwards, preferably above past price action. If we see a clear bullish Kumo breakout on the M30 chart with leading Kumo bullish, clearly bullish, we are going to have a Senkou span A, Senkou span B bullish crossover here, which will give born to a new bullish Kumo. If its leading edge is sharp pointing upwards, and if Chiku span, the green line, manages to go above the past price action, and even better if it points up in the open space here, then, and if of course our M15 chart is 100% bullish, then we are safe to enter long. We are safe to enter long, and we can put our stop at a safe place, which is below one of the Kumos, and we will pick the Kumo of one of the bigger time frames to give us enough distance to feel safe that our stop will not be hit. So maybe if we enter long monitoring the M15 time frame, we might place our stop below the lower border, a few pips below the lower border of the Kumo here on the H1 chart, for instance. That's just an example. You see at that moment you will see how the market moves, and you will make your decision, and of course it will depend on your account's equity, but theoretically placing your stop at a point where odds to be hit are slim is better for you. Of course, if you are above your trade, monitoring it, the stop loss only serves psychological purposes, nothing else. Nevertheless, it's good. It's a good practice to always use a stop, even if you are just above the trade, watching it. But just make sure that your stop is not exposed to market's noise, and you haven't placed it based on price move, price action criteria of the smaller time frames. Use higher time frames to evaluate the best point to place your stop. So thanks for watching and happy pips.